Hey folks, Dan Frio here, the Mortgage Update, and I apologize. I was away a couple days. And the market was kind of flat, but today, bam! Today is, and I got a request to please tell everybody the date as we go along. So today is August 13th, and I'm doing this after the market close. It's 8 o'clock my time here. And what happened today? Well, Trump tweeted, and the old tweet sent the market, the stock market, up. It up 400, but it closed up 372. That was good. But like I said, when the economy is going good, mainly the stock market, that's bad for mortgage rates. So let's get to this. Here's what's happening. In mortgage-backed securities, the mortgage interest rates are tied to this tool right here. It's basically a bond. This bond trades all day, every day of the week while the markets are open. Okay, so let me just show you something. Here's the intraday chart, just so you guys see. This is what happens throughout the day. You can see it's moving up and down. And I got a question the other day saying, does it just post one day or one time a day? Nope. These trade all day long. So this is what happened today. Let me see if it's let's look at this just to see what this is. Okay, nope, that is basically the whole day's activity. So that's what happened today. So you can see it's volatile all day long. All right, so but let's go back to what happened today. So Trump tweeted and basically said that he's going to hold off a big portion of the tariff increases that he was going to put on China. So what's going on right now is the market's in turmoil. The world's kind of up in arms right now because of Trump's doing this to China. Is it, should he, shouldn't he? I'm not here to say that, but it's kind of making chaos throughout the whole world. And interest rates throughout the whole world are starting to move down. You even have some places that have a negative interest rate, believe it or not, and it can be that way. And that's crazy for the markets. I won't go through that now. But, okay, so we went over, how these trade all day long. It is the 13th of August. Down is bad. So again, we follow the mortgage-backed securities market. This is bonds that trade that dictate mortgage rates. So let me just make this as simple as I can. As the price of these bonds go up, the price, meaning you're paying more for a bond, means you're getting less of a yield, or interest rates are coming down. Okay, so as prices go up, the interest rates come down. Okay, just think of it, just remember that way. Price up, yield down. That yield is what dictates interest rates for mortgages. So today we're just going to focus on this right now in this segment. So it was down 19. That's a big move. Okay, so let's go back to what I was talking about in the last couple weeks. We were testing these Fibonacci levels, the top tier and the bottom tier. Basically what this is everything usually trades in a range unless there is, I'll just say, Trump tweets or something kind of catastrophic that happens in the market, something out of the ordinary. So if it's just day by day and things are just going along, everything usually trades in a range. And this right now is the range that these bonds are trading. Okay, so back here, and at this point, I locked almost all my clients, and at this point, I locked the remaining of everybody. And if you followed my videos, I said, we hit this top, I'm expecting rates to start going up. And this is, again, it's inverse. So if this is the price and it's going down, it means rates are going up. So when I tagged in all my clients and we locked in here, since that day, rates have gone up every day. Okay, so that was a great call on my point. So thanks. Again, why do people use me, or why should you use me? Am I different from the other person? Yes. If your person is still having you on the sidelines, you missed out. This is probably a quarter to 0.2 to 0.3 increase in your rate while you're sitting on the sideline and your mortgage guy's out golfing or doing what he does or she does best. So that's what's going on there. Okay, so we go. That's that part of this, and this gives you some trend lines and everything of that sort. Okay, so now let's flip over to this. This is the 10-year treasuries. We follow this because usually these two instruments here kind of follow certain patterns. Okay, so let's go to this chart. And this chart is another area where I called I thought a bottom or a short-term bottom at the time. And I said, this isn't going to go straight down in a, basically like this, and everybody's cheering, rates are plummeting. And I said, when we hit this, I said, be very careful. Be very careful. Okay, so then we went a little bit below it, and then we just stayed stagnant to that point. Okay, so I'm still a proponent right now. Very carefully float. Okay, here's what I mean by when I say float or lock. Think that you're watching a stock. Okay, you're watching a stock, and it's XYZ Corporation. And what I mean by float is you're watching that stock. You're sitting on the sideline and watching it go up and down and up and down. Okay, so that's what we do with mortgage rates. What I mean by lock, let's say now you like XYZ company and it's come down here, the prices come down, and you're like, you know what, I think it's a good time to buy this stock. So you buy it. That's what we do when we say we locked in the rate. I like the level that we're at right now. I like that price, or I like that interest rate. I'm tagging that interest rate. I'm buying it. I'm locking it in. Okay, so that's what I mean by locking in your rates. So we watch, I monitor this every day, all day, and I try to find peaks and valleys. I kind of watch trends. I watch, the markets, what they're doing every day. And I have a TV or something going on in the background telling me what's going on in the economy and stuff like that. So I really follow this. So again, what do I do different than the other person? This is what I do for you. And I consider that this is my job. I don't just go in here. This isn't a sales job I look at. I'm a consultant. I'm your mortgage consultant. I'm not just taking down your order and, like a waitress or a waiter, take down your order and deliver the order. No, that's not it. I do much, 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 much more. So that's today's market. What's coming up? Well, I'll give you a few things. Consumer Price Index came up. It was up 0.3, a little bit more than they thought. They thought the range was going to be 0.1 to 0.2. What that is it's what we're watching on inflation. So here's where inflation plays a role. The Federal Reserve, one of their key measures is they want the inflation rate below, I think the trigger right now is 2.4 that they've changed that to. So they want the inflation rate at 2.4 or less. Right now we're at 1.8. We're good. Consumer optimism, very good right now. Small company indexes, very good. They're saying they're going to hire. A lot of technical indicators are showing a recession in the next 12 months. I don't really see it. I talked to some people in the shipping business, which that's a good indicator of what's coming. They're down a little bit, maybe 3 to 5%, but it's not a dramatic drop. So, I don't see a lot of these things. And then with the ease in the tariff scares and, a bunch of other things in the background, I think we're going to be okay. But again, even if the fears of a recession come, it's bad for your job maybe. It's bad for your investment portfolio, but it's usually really good for interest rates. So I hate to put it that way, but so that's today's report. Again, it's August 13th. My name is Dan Frio. I do this mortgage update every day, or I try to do it every day. It is crazy busy right now. So I apologize. I just got home and it's 8 o'clock Central Time. So I'm going to have some dinner, click on the tube for about 15, 20 minutes, and then go to bed. And then I'll be back at it tomorrow. So if I can be of any help, let me know. Don't forget to give me a thumbs up if you would. Subscribe down below. And if you need my assistance, please give me a call at 844-775-LOAN. That's 5626. Thanks again. God bless. And I will see you tomorrow.